Hi, this is Brian Shannon from AlphaTrends.net. It is Thursday, the 10th of April, 2008, and I've got to head out for the rest of the day here, so I'm just going to do a quick intraday update / end of the day analysis of the markets here. The S&P 500 looks like it's finding support near that 135 level, and as we've seen, that's been an important area and where we kind of expected this market to come down to. It's the level of the basically the VWAP for the year is right there at about that 135 level, and we've also seen right now that the market is holding above a rising 10-day moving average. The 20-day moving average is about to cross up through that rising 50-day moving average, so we've got a much more bullish looking picture here on the S&P 500 than we've seen in a while, and it continues to, since it broke this downtrend line. The bigger resistance level area, the area potentially is this 140, 139.5 to 140, but it looks like we might be building for another test of that area. So looking at a 10-minute time frame, you can see here that this 135 has been probed a couple times here over the last 2 days, and the market's nicely higher today, right up to this 5-day moving average. Looks like maybe a little bit of resistance potentially here at about 136.85, 136.90 or so. What I'd like to see would be maybe we can set up a little inverted head and shoulders pattern in here and then possibly break out tomorrow. I hope so, because I'm not going to be around trading this afternoon. But if it breaks out, then it may continue to run up and test these highs and then go on to the bigger level, which is, of course, at 139.5 to 140 level. So we're seeing a lot more encouraging signs here. A real big surprise for me today was this semiconductor index. It looked like a real failed breakout right here that was going to lead to maybe more downside or even just some more sideways action. But these semiconductors got some news today, and right up through that 29.75 level that we're looking at, and totally trapped the sellers in here. So now we've had two failed moves. Basically, it failed to break out here, then it broke down. This lower low, though, in here trapped a bunch of sellers, and then those shorts are getting squeezed, new money's coming into the market. So now it looks like this 3070 area is attempting to be the next level of support for this market. I wouldn't be surprised to see maybe a little bit further consolidation above the 3050 level, but this picture is clearly looking a lot more bullish than it has for the semiconductors. Again, though, the weekly time frame is still pretty negative looking, but a test of the 32 level doesn't seem unreasonable in here, considering all the volatility that we've seen and the fact that from failed moves often come fast moves, and here we've had basically a double reversal. The one really more concerning area for this market, where it would be really nice to see some participation, would be in the financials. They still are stuck below this trend line, below the 50-day moving average, and just below recent levels of support that are very key to this market, near that 26 to 26.20 level. If this market could get back above the 26.20 and hold there, then I think we could build the way for higher highs and higher lows. In particular, once we get above these levels, $27.20, and then 27.45 or so over there, then we can start to look at this inverted head and shoulders pattern still. Maybe it's not the best head and shoulders pattern, but clearly the daily time on this time frame, we're seeing this pattern, that this trend line is being tested more frequently, and it may lead to a rally higher, but we still need to see a lot of work done. In particular, the most important level short term for this market is to get back above that $26.20 level. Let's take a look at the Qs, and then that's the last one. We'll wrap it up. The Nasdaq is is acting great here compared to the rest of these markets. Right now, it's up 2%. You can see this prior level of resistance in here at just about the 45 level. Seems as though it's acting as support. We've got a rising 10-day moving average above a rising 20-day moving average, which is above a rising 50-day moving average, and we've broken this recent little pattern of lower highs and lower lows. And these little patterns of lower highs and lower lows, again, it occurred right here. I wasn't expecting the market to rally like this, but it came very nicely above, and it's holding above that 5-day moving average. So it looks like this could be a pretty solid move. We've seen this market rally on increased volume. You see these nice volume thrusts in here this morning, followed by low volume consolidations. That's just perfect bull market activity at least on the 1 minute time frame. And it's looking more and more like, you know, this 46 level that's giving this market so much trouble is back into consideration for getting back above and holding above that level. If it can do that, then we can maybe set our sights, you know, on these bigger levels up near the 200-day moving average at about 48 to 48.5.